Welcome to Raising Money 101. My name's Adam Adams. I'm a multifamily syndicator. And in this 4-video series, you see the 4 videos up top, I want to share with you some of the things that I've learned, both from interviewing 100 plus multifamily syndicators and from my own experience buying hundreds of doors. So what can you expect from these 4 videos is, number one, I want to share with you some of the tips and tricks to be able to put your name in front of other people, so that you don't have to ask for money anymore. That way they reach out to you. I want to share with you the legal, and it's actually kind of stressful to know that there are these laws, but I want to shed some light on it in the next video. Then you're going to have a lot of light shed on what are the ins and outs. What can you say and what can you not say? So you want to be cautious because there's a lot of multifamily syndicators that are not doing this right. And I want you to do it the right way. Okay, so here we go. We're going to go in and let's check it out. All right, so first off, although this is called Multifamily or Raising Money 101, I want you to know that this is actually going to have a lot of good content for people that even if they have 5,000 multifamily doors. So let's dive in. Today's video, I want to share with you some of the ins and outs of the asset class so that you can speak a little bit more educatedly about it, which will help you to be able to share these opportunities with your passive investors. So there are 7 advantages that my team, Blue Spruce, sees in buying multifamily. And I want you to have some of these so you can kind of be able to regurgitate them and share them with your passive investors. Number one reason why we love the asset class is that it's a team sport. All right, so the due diligence, the raising money, the financials, the analyzing deals, the underwriting the deals, all these different pieces, you don't have to do alone. It's going to be a team effort. So your passives, they will be coming with money, and all that stuff will be taken care of for them. And you, don't worry, you just need to partner with the right people. So this is a great thing. It is a team sport. The next thing that we really love about the asset class, number 2, is it's very risk adverse. So just to give you a little bit of an example of why is it risk averse, we will talk about the .com era, 2000 to 2002. We'll talk about the housing crisis of 2008. My friends, when the stock market went from a 401k to a 201k, and when there was a lot of houses that were going to foreclosure, still, multifamily as an asset class had less than a 1% default rate. We love the fact that the banks will lend on it. So I wanted to share what is the Sharpe ratio. The Sharpe ratio is very important to a lot of high-end investors. So your passives might want to know what is the Sharpe ratio or how does it affect multifamily. So when we use that, or when we let the smart people do what they do and they use that, well, let's just let them do it because they compared it to Bitcoin. They compared it with S&P 500. So you basically look at the last 5 years or 10 or 20 or even 30 years. And even if you go back that far, you'll see that the S&P 500 performs here, and multifamily is about 6 to 8 times stronger as an asset class when it comes to the risk that's involved. So you make more with less risk. It's fantastic. A really great thing to sell to your investors. We also like that the asset class number 3 is easy to understand. This is an easy to understand asset class. There's a lot of assets out there, and some of them you would just be pulling your teeth trying to explain the opportunity to a passive investor. So it will help you a lot to know that almost everybody in this country has lived in a multifamily once or twice. Everybody's lived, most people have at least once in their life when they're going to college lived in an apartment complex. So everybody understands the asset class. Number 4, there's money readily available, both on the equity side and on the debt side. So it's easy to raise money when people understand it. It's easy to raise money when it's risk averse. So you know that one of the things that I actually want to share on this about raising the debt is just to think about it for a moment. if you're trying to get into assisted living, mobile homes, or what's the other one? Self-storage, you're going to get a 70-30 loan at best, usually 70% loan to value. But on these multifamilies, the last two that I did that were multi-million-dollar projects, I actually was able to get these at an 80-20. So you can get a little bit more leverage from the banks because they know it's a safer asset class. Money is readily available. Number four. Number five, we like the trends. All right. So just to want to brief over some of the trends that are happening. And right now we just talk about the two largest populated age classes in the United States, which are the millennials and the baby boomers. Both of those age groups right now are actually preferring multifamily as opposed to single family assets. Okay. So we love the fact that because the trends are going our way, these baby boomers who are right now 50 to 75 years old are preferring to start to not have to mow their own lawn. But again, they're not old enough to be having to live in an assisted living facility yet. Same thing with the millennials. They are wanting and choosing to have a little bit more freedom, and they're wanting to live in multifamily. We love it. The next thing, the sixth thing, is the control. So you're actually able to control the NOI, the net operating income. You actually are able to control where you buy, when you buy. There's a lot of asset classes that are passive that you're unable to have any say or understanding or control of what is going on, which is a lot of people with the Bitcoin that went from 20,000 to 6,000 overnight. You just are unable to say what you can do to affect that asset class. So knowing with multifamily, there's a lot that you can do to actually affect the asset is a wonderful thing to note. Okay, number 7 is that there's multiple ways to make money in multifamily. So number 7, multiple ways to make money. We're actually going to go over the 5 ways that I know of that we make money, and all of these work for you as well as your passive investors. You both get cash flow on a monthly or quarterly basis. You both get a principal pay down. That means you have leverage on the property and other people are paying down your debt for you. You both, meaning your passives as well as yourself, will have the ability to have some forced appreciation to make money by controlling the asset. And this goes into raising income and lowering expenses, which makes the net operating income go higher. What's wonderful is how are these asset classes actually valued? They're valued based on that NOI, the net operating income. So the higher the income versus expense that you can have, actually the higher the value of the property. Number 4 of these 5 ways that you make money into multifamily is actually natural appreciation. Okay. So it's true, you can actually affect the value, but not only that, but as we continue to have more babies, and they're making more babies, but they're not making more land. This asset is needing more and more people. So rents happen to be going up. Property values happen to be going up. So even without you doing anything, you're getting some natural appreciation in that property. And the 5th way that you make money in multifamily is depreciation. So that actually you're able to write off expenses or depreciation against your income, which helps you offset some of the income and you pay less in taxes. So a lot of really great things in multifamily. Loved that we were able to cover those 7. So in the next video, I'm going to be spending a little bit of time with you on something called a sample deal package. All right. So this is one of the single biggest game changers that are going to affect you on raising your money, is that you have access to a sample deal package. And I'll tell you why. But right now there is a button below. It's blue and it should say something like get your free sample deal package. So just click on that button and let it start downloading. And then you'll go ahead and go into the next video. I want you to watch all 4 videos in a row. They're all short. They should be 5 to 10 minutes each. So next video, we're going to talk about the sample deal package and how it's going to help you. So thank you for watching, and I'll see you on video 2.